one way to get some of that tax diversification is a Roth conversion. What's a Roth conversion?
A Roth conversion is where you take money from the pre-tax 401k or pre-tax IRA and you shift it over into a Roth IRA or Roth 401k plan. Now, in the year that you make that conversion, you make that shift, you are taxed on the amount of money that you convert over. So if Sherry decides she wants to convert $25,000 from a pre-tax IRA to a Roth IRA, she will pay taxes on that $25,000 in the year that she converts. The benefit to Sherry is that once it's over in the Roth IRA, it grows tax-free forever. And then later down the road, a qualified distribution from that Roth IRA is 100% federally tax-free. That's the power of the Roth IRA, the Roth conversion for Sherry, but she wants to be very intentional in that year of conversion. She wants to make sure she's converting the right amount so she doesn't pay too much tax on the conversion. And she wants to make sure that she is in the right tax bracket for that conversion. That's where the planning comes into play.
As we look at this as buckets too, so we've got this Roth bucket. A Roth conversion is one way to have that Roth bucket of money, but there are a couple of other ways that people can, I guess, accumulate Roth money as well.
Yeah, one of the other main ways to build up Roth funds is the Roth contribution. So the main two ways to build that you can do contributions are into your 401k if they provide you with that Roth option. So that's something you want to be aware of. We get these questions all the time. The traditional 401k has been around much longer. The Roth 401k is newer. So for a lot of people, you've been on autopilot, you've been making those contributions into the traditional side of the 401k, and we get those questions all the time. But now's the time to start looking at that and make that decision. Does it make more sense for you to continue doing what you're doing, or now the opportunity to start shifting those contributions to the Roth 401k? And then the Roth IRA is the other option where new money, new contributions can be made into these Roth vehicles so that over time you can accumulate and build more and more Roth dollars.
And sometimes one of the questions we get is, well, what should I do? Should I contribute to the Roth IRA? Should I contribute to the Roth 401k plan or the pre-tax? And there are some restrictions around the Roth IRA. Not everybody has the ability to contribute to a Roth IRA. As an example, if you're single and your income is below $150,000, then you can contribute the full amount to the Roth. But if it's above $150,000, you're phased out where you can't contribute as much, or maybe you can even contribute zero to the Roth IRA. If you're married, that income level is $236,000. So you have to be aware of what those contribution restrictions are. And then also with the 401k plan, if you have an employer match involved with that contribution, that could incentivize you to make the contribution to the Roth or pre-tax 401k as opposed to the Roth IRA. So all of those factors need to be considered.